All right, so we move on. In the last couple of weeks, several life insurers like Tata II, HDFC Life, ICICI Pro Life, Aditya Birla Sun Life have come up with their versions of guaranteed income plans that promise guaranteed payouts at predetermined intervals against the payment of certain premiums. But what exactly are guaranteed income plans, and should you be investing in them? Let's answer all of these questions with Ashish Lat, Business Head, Insurance Dekho. Ashish, good evening and welcome to the show. We're going to talk about different type of guaranteed income plans offered by life insurance companies. Now, these kind of plans typically are a source of stable income, if one can consider it that way. Not necessary with the benefit of inflation counted in, but what's the typical structure of a guaranteed income plan, and what are the new type of guaranteed income plans that we are talking about or looking at?
Thanks, Kavita. Pleasure to be on the show again. See, you can think of a guaranteed income plan as a fixed deposit with a really, really long tenure. Some of the insurance policies are for tenure up to 50 odd years. So, FD with a really long tenure with certain built in insurance features. For example, to answer your point, you can have a premium paying tenure of 1 year, 3 year, 5 years, 10 years, even 15 years in certain policies with certain companies. And the payout is defined as per the policy structure. So you may opt for a single payment at the maturity of the policy, say after 20 years, 25 years, or even 50 years. Or you may opt for regular payments after the maturity of the policy, more like annuity, which may be monthly or quarterly or semi annually, or you may opt for certain payments at certain time intervals. For example, after 20 years, after 25 years, after 30 years. So you can decide the premium paying term. You can decide the income term when you want the money back from the policy. That is how it really works. In terms of insurance features, they offer life cover. It's a very decent cover, not very high like what you get in a term plan, but up to 10 times the annual premium that you're paying is what most of the companies offer.
Okay.
A lot of companies, yeah,
Yeah, sure.
please.
Go on. You have more to add, please.
Yeah, so these plans are very popular right now, simply because you lock in the rate of interest for a very long tenure. So what happened during COVID? A lot of consumers, especially senior citizens, they were locked in investments which were paying probably 4%, 5%, nothing more. Whereas when it comes to guaranteed income plan, you can make up to 7% annual returns over 50 years. So you lock in your rate of interest for a very long tenure, which really protects the policyholder during terms of low interest rate. Now, these plans are also tax free. So the income that you get from interest on these policies are tax exempt at the time of maturity. So a person who falls in 30% tax bracket, the effective rate of return would be more than 10%. Now, so you have high rate of return, long tenure, tax free, plus these policies are practically risk free because IID regulates the insurance companies and all the plans, and IID has a very, very high solvency required for all the insurance companies. So, risk free is what you can really call these plans.
So, Ashish, typically, what kind of an investor should be investing in? Because when we look at these plans have high fees. Okay, when we talk about return, these schemes typically invest in government yields, and you will not get more than 4 to 7% maximum, which is not even beating your inflation. And we are talking about long-term goals like retirement, child education, buying a house, maybe that you might want to tie up to these kind of schemes. But when we have to look at these particular schemes and an investment strategy, there is no way that is going to beat with the investment strategy you would be adopting with an equity exposure, say. So just because it's tax free, does it make sense to invest in a guaranteed income plan?
See, these plans are meant for very high risk averse investors, folks who cannot really tolerate the volatility of the market, of the equity market. So, especially senior citizens, or if you're saving for a specific goal, for example, your child's education. Now, if you invest in equity, what happens if the markets are down, or probably if you're going through a recession when you actually need the money? This is where all these plans come in because you are protected from the volatility of the equity markets in times of need. Also, people who need a stable income, for example, after retirement, they should opt for such plans because then they are assured of a certain monthly payout after their retirement. So risk-free folks, people who are investing for certain milestones and who cannot really afford to take risk.
Ashish, the kind of payout that is promised, is it a percentage of your sum assured? Because if that's the case, then a way to say that you will be earning 10% on whatever you invest could be misleading. What do you say?
See, it's a percentage of sum insured. Think of, like I said earlier, think of them as FDs. So whatever money you put in, if you're getting 7% yield, that is the payout you'll get at times of maturity. It's not really misleading because you do get tax benefits and the income is guaranteed. So you know the yield you would be getting at the time of investment itself, unlike an equity plan where you do not really know what you would get at the maturity of the policy or when you actually need the money.
Talking about the new kind of guaranteed income plans which life insurance companies have come up with, what is new in it apart from the traditional ones that we discussed?
See, lately, a lot of insurance companies have added a lot of insurance riders on the in the traditional fixed income plans. For example, if traditionally you could buy only a fixed income plan with a certain life cover, today you can also add a critical illness rider, wherein you get a certain sum insured in case you are diagnosed with a critical illness, as defined in the policy. You can also add certain other riders which are different from company to company. Critical illness being one. So accordingly, you can add a lot of other riders which were not there earlier. That's one. Secondly, even the yield that you get varies from one company to another. So you may get as low as 5.5% in certain company, and you may even get up to 7.5% in the case of other companies. So that's the second one. So innovation mainly in terms of riders. Secondly, in terms of yield that you get. Thirdly, in terms of other benefits like surrender benefits and others, which were not there earlier, now you get all those benefits. So there's a lot of innovation happening in the sector with more and more insurance companies launching such plans with more and more innovative riders.
All right. Apart from that, when we look at the income that is given for survival, if we have to compare it with a term insurance plan, do you think the coverage is enough in a guaranteed income plan?
See, first and foremost, a term plan and a guaranteed income plan are two different products altogether. They are like chalk and cheese. A term plan is an insurance product, a pure risk product, wherein the person insured gets nothing. It's only the nominee who gets the sum insured after the death of the person who has been insured. Whereas when you talk about a guaranteed income plan, it's mainly an investment product with slight component of risk or insurance built in. Here, the person who is insured gets the income which has been guaranteed at the inception of the policy itself on maturity of the policy. So these are two products, two different products. Term is a pure risk product with no investment value. It has zero investment value for the person insured. Whereas you have a guaranteed income plan where the person insured gets the full money guaranteed at the inception of the policy on completion of the policy term or maturity of the policy.
All right. Ashish, that will be end of this particular discussion. Thank you so much for removing time and helping our viewers understand the guaranteed income plans.